I've only done 3 trades this week, which were on Monday and Tuesday. I had 2 trades on Monday, 1 trade on Tuesday, and I have not traded since. So you know those trades already. We've been over them. The first one was in the euro dollar. It was the high of this hammer when the market extended past ATR, hit that. I was bid there, stopped beneath the low, target of the FTA at this low here. And then the second trade that set up was, of course, the dollar Canadian, where I was bid at this high, stop underneath the thrust, target of this low, and I got stopped out for a 1 hour loss, and then it obviously moved up afterwards, which was great to see. It didn't frustrate me at all. And then the third trade was in the euro dollar again, and that was here, and you can see the execution recording on the website. I was originally bid here at the high of this hammer, stop underneath the low, target of the weekly open, and then we formed this hammer ahead of my entry, so I decided to pay up and use a stop entry order to get into the market as it breaks the high of this hammer. Didn't use a stop underneath the low of that. I put the stop underneath this thrust candle that broke through the original hammer high, just in case it did decide to have that final test. And again, still a target of the weekly open, and then we took off, and that was the third trade of the week. So I ended up 1 loser, 2 winners, plus 2.35R on the week. Some people will see or hear that I've only taken 3 trades on the swing strategy and think, oh, that's not much action. Like, you were done by Tuesday and you've done nothing since. Well, that's not usual for me every week, but it happens, and that's okay. So many people have this feeling that they've got to be in the market constantly. I think there's a kind of general feeling of, I'm a trader, so I have to trade. But you don't. I think that you earn your money waiting for the market to maneuver itself into a position where you can strike, and then you strike. But I think the money's made in the wait, personally. So, again, it was 2.35R that I ended up positive on the week. If you can average 2R or more per week consistently in a real account, not demo, for 6 months minimum, you can walk into a job in prop. The firm I'm at would probably start you with 50,000 real capital initially, but they'd scale you very aggressively as you show performance, with literally no cap on how much they can back you with, because they have very deep pockets. And some people would say, well, mate, 2R per week. I did fucking 6R in a trade on Monday morning. But I mean, end that week with at least 2R positive consistently, because most don't. But again, if you can do that, then there are people waiting to throw money at you. So don't worry if your account's small initially. Don't worry if you have to spend a lot of time sitting on your hands, because once you have access to significant capital, you do not need to strike often to make an absolute fortune. So that's what I wanted to say on that. Anyway, just to recap on other things that I was looking at this week. Martin Crawford, will they take a 55-year-old? Mate, of course they will. They're not fucking ageist. Sorry, you can't come in, you're too old. Yes, they will. Right, so just going over a few things. So the BTC order that I had in was pulled. The trade was set up like this. I haven't changed it. Actually, if I hadn't pulled it, you would see that I'd be filled, and it would essentially still not have hit the stop and be around where I would have got in, but it was pulled. It was pulled yesterday, and the reason that it was pulled is because if you look at where my initial target was, which is a quick return to the FTA, and then you see what price did when it came up into this area, it formed a swing high just ahead of the entry, and that was just after I closed the session on the live day. So I pulled that order soon after, and if you hadn't pulled it there, you certainly want to pull it here. So that was BTC. I made that tweet last night about it now turning in front of my levels like it was the fucking Bund. Speaking of the Bund, of course, I did say to you last night that I thought we'd run on the inside day low, and I was attempting to offer it here. So when I got to my desk this morning, was 5 to 7, 5 minutes before the Frankfurt Open. We were trading 57s, and I was offered 71s, and I thought, this is looking good, I'm going to get this. And then it just tanked. So I was left high and dry. I didn't get the trade that I was looking for there. Look at this price action. Look how it trades through the inside day low and literally trades through it by 3 ticks and then goes absolutely vertical and straight through the high of the range. I didn't get it up here either, but interestingly enough, if you go back over old sessions, you'll remember that we were talking about a potential reversal in Bund at 14s. So you can go back and remind yourself of that if you like. And that pretty much nailed the high as well. It went 5 ticks higher, and then that was the higher day. So, as I've said so many times, there's a lot to be said for these levels. I did pull the 71s, of course, when we started ramping, because although that's not a bad level, the trade was done by then, because the trade was framed around the idea of it pulling back to the last low pre-break and then running stops on the inside day low. Once that has happened and it's occurred and we're moving up very, very aggressively away from that area, and you know shorts are caught, longs are joining it as we surge back through the range, you really don't want to stand in front of that in the middle of the range. That's why I pulled that after we'd hit the target. If we go over from there and look at oil, I'm still offered this. So it hasn't hit my entry yet, but we discussed this yesterday. I don't think I'm going to get filled tonight. So when this session closes, I'm going to cancel this order, although it is still in the market right now. And I'm just going to put it back in Sunday night because I still like this trade. Remember, what I'm attempting to do here is look to get short based on the pattern failure. So we've closed below the head of the hammer and likely are going to close below it on the weekly, which suggests in the next week we will make a run on that low and take stops underneath that. And very, very interestingly today, what have we got? We've got an inside day. And what have I told you about inside days? One of my favourite trades is when we break the high of an inside day into an overhead level. And that overhead level is the initial high of the hammer where traders could be trapped from. It's also these lows over here. It's very visible on the daily as this pullback low from the 23rd of September. So I'm waiting in the wings for this. And again, in terms of the confluence where I'm looking to get in, currently it is just in front of ATR and just behind the 38% fib. So there's a lot going on in that area. Likely when I put the order back in on Sunday night, we'll lose the ATR as a factor of confluence, but that's absolutely fine. The area's a cracking one. It's setting up very nicely, and I anticipate that that'll be a good trade if I get filled on it next week. Could it go up there and fill tonight? Possibly it could. I don't think it will though. You know what? If it did, just imagine, I cancel it at 7, maybe it goes up there at 8 and then begins to turn. Well, then Sunday night I'll try and find a way into it if it's already turned from the level. But I don't honestly think that's going to be the case. Am I worried about not getting my entry? I don't worry about anything like that. I'm used to not getting entries on some trades. I didn't get the entry I wanted in the Bund, and I'm okay with that. I've gone past that level of being truly frustrated because there are enough opportunities out there, and as soon as you've missed one, there's usually something else that's in the pipeline that you're planning, and you just wait for it to come along. It is a waiting game, and one of the skills I have developed is patience. And one of the things I'll talk about on Sunday, and now I'm really going off on a tangent, but when we're talking about creating a trading plan, I always ask people to think when they're creating the plan, what do you think that you have over the next trader? Because oftentimes it's not the strategy, because a lot of people can trade exactly the same strategy, but why do some people make money and some people don't? I've got students that trade my strategy that are absolutely killing it, and others that couldn't fucking hit water if they fell out of a boat. And I think a lot of the time it does come down to their mindset. Now, not always. Some people just don't really understand the strategy. They don't understand where to bid, where to offer, and they need more time learning. But what separates a lot of them is the mindset, is the work they put in, their commitment to their edge, and attributes like, for example, patience, like, for example, being able to take a couple of hits and then stand up and take the third trade. So I always like to try and get people to consider, what do you have over the next trader? And I can answer that question for myself very easily by saying, comparing myself to the traders that I've ever worked with, I can beat all of them in patience. I will sit here and nothing's tempting me into that market. I mean, I had guys on Thursday in the chat, not really trolling me, but like, fucking hell, Tom, man, come on, take a trade, stop talking. And I'm like, I've got a lot of people in here watching me, and there's pressure to take a trade, and I couldn't give a fuck. I'm calling out the level, and if it doesn't hit, it doesn't hit. I know that will hit at some point, and you'll all be able to see whether it's a winner or a loser. But, if I have to sit there for an entire day and it doesn't set up, I could not give two shits, because, there's real money on the line here, and, we're not taking action just to stop people getting bored. So that was that. Now, let's move on from that. I think, again, that'll be a good trade next week, to the pound yen. I think I bamboozled a lot of people this morning by posting this on Twitter and saying nothing to note here, and then everyone was like, oh my god, Tom's killed it, he's traded this level and smashed it. I didn't trade this level. Okay, I didn't trade it. What I really meant when I posted that was, look at this massive bearish engulfing that's reacted off of this last low pre-break that's been untested, because remember, this one wasn't. This could be setting up a trade for next week to come in, so I was kind of trying to draw your attention to it. But this is the funny thing with socials, isn't it? Everyone sort of makes an assumption on what you've done, and everyone thinks I've sold the fucking high in the pound yen and I'm fucking retiring tomorrow. No, I didn't trade it. Now, I actually didn't trade that because it's one of the pairs I trade, but I haven't done any analysis on it for a while, and I did have other commitments today, to be fair. But I went back and revisited it, and you actually could have had a trade off of that level. So this is hindsight Harry in action. But if you have a look at that daily level, which you should be able to isolate easily ahead of time as a last low pre-break, and then you go back and you revisit it on the hourly, you can see the last low pre-break coming in right there. It's this candle. So the 4 till 5 a.m. candle on Wednesday the 31st of July. And you could have gone offered there, fitting the exact criteria for how I trade, with a stop above that thrust candle, and then you would be looking for your FTA. So you would initially maybe think, can it get down to there? That would be a 2.46R, and you're scrolling across thinking, are there any highs that are close and nearby? And then you see this one just before the level hits. So at that point, you've got to really, in terms of following what I do, adjust it to that high, and you would look at the trade like that, and you could take that, and it's just over a 1R for me, and very, very violent move. And sometimes when we're talking about mindset, people get irritated by this kind of action and think, fuck, look where I've got out and look where it's gone now. And that's something that you cannot afford to be frustrated by. You just have to deal with it and say, right, I traded my plan, I got out, and maybe there'll be another entry. I'm not a robot. Sometimes things frustrate me in the market, but I just go for a little walk, and I just make sure that when I next sit back down at my desk, that emotion is not coming back into the next trade. So you have to just let it go, and then be prepared that you might get another entry if it sets up exactly right for you at a later stage. Let's cover one more thing tonight, which is silver. Now, I saw a tweet from a ledge called Salvadorini. I don't know if Salvadorini's in here, but he did a fantastic breakdown of this trade, and if you want to see that breakdown, I responded to it by saying beautiful, because it really was. He did some really, really nice analysis there. And it wasn't a trade that I took, because he traded it down on a 5-minute. But this is exactly what I love to see, because this is someone that's using the analysis but hasn't become essentially a clone of me. So he's had a look at the daily time frame, and he's noted the SFP of this high up here. So you've got a clear daily bias. So there's your first higher time frame call to action. It's also a shooting star, so it's a cross candle. And if you remember back to the trade I tried to set up in dollar yen that I ended up not getting into early on in EFL, this is the opposite of it. This is a cross candle, an SFP and a shooting star. Back in dollar yen, it was an SFP and a hammer. But he's marked this out. He's got the higher time frame bias. He knows because it's a shooting star that we are likely to revisit the high of the day before, which is something I've said many times. So he's marked out that high, and then he has dropped down and had a look at that on the hourly time frame. And if I've understood his tweet correctly, he hasn't entered up here, but he's seen that there are more or less equal lows down here. And what I'm seeing is a retail head and shoulders pattern. So the market very likely to gravitate down towards that area and take stops. And he knows it's likely to turn here, but he's marked out this high as being important. The mid-range swing high here. And then he's come down to the 5 minute for the entry, seen it break that area and come up into it from below. And I'm thinking if I was trading the 5 minute, I would have offered it there and got the fill off the last low pre-break. From what I understand from what he said, he joined it after we've got this 5 minute bearish engulfing. And it's beautiful. It's an absolute thing of beauty. I mean, isolating the bias on the daily time frame, isolating where you want to get in on the hourly time frame, knowing exactly where you want to target, watching for the price to move through your level, come back to it with a rounded retest, watching the 5 minute price action, entering it, and then riding it down and getting out. Absolute thing of fucking beauty. Well done. What an absolute ledge. There's no other way to say it. Now, I also got another tweet from somebody that said, Tom, I bought this here in silver and I used the stop underneath this thrust candle here, and I think they said their target was there, and they were like, wow, you know, I got filled at the low, straight to target, great trade. And now I'm going to sound like a bit of a cunt after I've praised Salvadorini, and now this guy's going, well, look at my trade, Tom. And I'm like, yeah. No, look, you got a winner out of it, and it's a nice winner, and no one's going to knock a decent winner, especially when you've got in right at the fucking low, and it's so precise. But, fuck me, mate, that stop, like, really? That stop is so tight. I mean, look, these levels work very well, but in a market like silver, where you've got these swing highs just beneath it, that is one fucking tight stop. And there is a little part of me that is wondering whether you got a little bit lucky on that. So I'm just going to put that out there. There might have been a little bit of luck, because that is one fucking tight stop, man. And many times if you use a stop that tight when price is plummeting into a level, you get picked off. I don't respond to all the tweets that people send me, and I rarely retweet stuff. And the reason for that is I just don't want to create a big hoo-ha around how I trade. The other night I was lying in bed and I went on to Twitter search and I put in LHPB, LLPB, and fuck me, it's everywhere at the moment. And I was like, oh no, I've been trading this way for over a decade, and you don't really see those acronyms posted about much, even though I have taught them on my webinars and on my course. But I started seeing LHPB, LLPB. But that's fine. Obviously you want to talk about the trades you take, but I'm not going to be promoting it massively, because I don't want the entire world trading this way, and neither do you, because we're all competing for liquidity. Whether you believe that or not, it's a fucking fact. We are all competing for liquidity in this market. So if we're all trading the exact same way, it's not going to be the best thing. So let's not create a big drama around it. Let's not be like, this is the best fucking strategy ever, I'm getting pinpoint accuracy. By all means, send me your trades, but don't expect me to make a massive song and dance, is what I'm saying. So if some of you are kind of thinking I'm being a bit moody, I'm not. A lot of the time I DM people when they post a trade, and I talk to them about it behind the scenes. So I'll be like, oh, what a great trade you alleged, rather than actually saying it publicly. So that was really all I wanted to say for today. Again, this order's going to be pulled as soon as I close this session, but it's going back in Sunday night. I think this is a great trade, and it will be going in the playbook. Now, that's a good question. If you're shorting oil, are you concerned about this FTA that's developing here? No, because I've got a weekly time frame bias. Concern is the wrong word. I'll be watching them. There's room between where we're getting in and that high to potentially get out if it doesn't look like it's going to get through it. So you've seen in some examples, was it yesterday, we were talking about this swing high here, which is a daily time frame swing high, and we were talking about when it traded up into ATR at the low of this shooting star, potentially being able to short. And you could ask the same sort of question. Are you concerned about this? You've got to be aware of it. But look what happens. It hits the level perfectly. It trades down into this level and then closes as a bullish engulfing. When you see that and you think there's a possibility I'm trapped, you're just straight away on the bid. Now, obviously, you know that I don't really care too much about break even. So when I see that, I'll just get out on the close of that candle. But again, no, I'm not concerned about the oil, but I'm definitely going to be watching it. You can't take your eyes off it there because there's an FTA forming. So what you really want to see is it punch through the highs of the inside day, and then coming into the close Monday, you want to see inside day failure. And if you've got inside day failure with a long rejection wick coming into the close on Monday, you have got this by the nuts. And then it's time to add. And then it's time to get short in size. As long as it fits your rules and as long as you use your risk management protocols. I'm very selective when I add. I won't add just because it's moving in my favour. I have to get new entries that would be the same types of trades I would take if I wasn't already in the market. So let's say I get filled up here and we get inside day failure. I'll then look for a break and rounded retest, perhaps somewhere in this range. Maybe I'll have to wait for it to move all the way through and for the inside day failure to complete without getting a second position and trade a break rounded retest of this level. We've got a big target, and when you've got a big target and you see price moving in your direction and confirming your thesis and breaking levels and retesting them, that is when you have to squeeze those balls tightly in your hand, because these are the trades that can pay for a lot of the time that you spend waiting doing nothing. And of course the odd loser you get as well. So I'm going to leave it there for now. The spreads are crazy on the open. When do you reinsert? Well, put it in when the spreads aren't crazy, mate. Cheers, ledges. Have a good weekend.